Bam.
Nothing can stop me. I'm all the way up. All the way up. I'm all the way up. I'm all the way up.
Good morning, Vietnam.
It is morning.
You know, everyone loves that.
Stick
Now
to it.
when people call me, they're like, "Good morning, Vietnam."
That's true.
That's because
He heard it this morning in the car.
First of all, let's talk about the
First of all, 1 second. Welcome to the Money Matrix podcast, where smart money finds a smarter way. I'm Meyer Delau.
I'm Ronen Fishman.
Alan Hastings.
You're a resident Canadian. Please say that.
I will say that I'm a resident Canadian. I'm actually a resident American Canadian. So let's clarify formal departure. I'm legit.
Wow.
You paid the tax.
Not only that, the Department of Immigration has announced that it has received our application for a green card formally. So
congrats.
that's a big thing.
You stick handled that well.
I did. We talked a little bit about stick handling, and then it went in a whole different tangent, not to do with business. But I'm going to go back to what you were saying. People saying "Good morning, Vietnam." Let's talk about before we get into the wrap up. The power of social media. The things that weren't done before that are done. Like, you are a Instagram sensation now, and M-Bank's. No, I'm serious. 50,000 views on like 6 different shorts or reels. Incredible. The page, the Go M-Bank page, has grown by almost 1,000 followers since January. I mean, you're talking about a 30% lift, and it doesn't seem like a lot because you have people like, if you put 1,000 people in a room, it's a lot of people that didn't know about before. So marketing,
what's
social
the
media.
craziest thing? It's Ziv, who's I've known for 10 years, and he's like, Meyer, let's preview this watch. And that's how it happened. And then of the 20 people that walked by us that time asking him, he pulled me in because he was asking someone about another watch, and then that's how it started.
Yeah, but you see, I've used influencers before, and then there's, it's a landmine. Like, you really have to walk through that field. This guy's legit.
He's
like,
a friend
everybody
of mine.
knows
Like,
him.
I'm not using him as an influencer.
Right.
He's
No, I
just a
understand.
friend of mine.
Yes,
Like,
but his power and reach, and you can see how much emphasis he puts on his stuff. Like, he's constantly posting. He's really the guy. Like, I had shared the reel that he made with you and I, and they're like, "Oh my God, we know who it is." All my guys started ripping on me. They're like, "You're got the cheapest watch on his page." You're like, they're just going at me, and I'm like, I know, I should. But like, the point is that people know him. He's got like 500,000 followers, 600,000 followers. Like, that's a lot of people, right?
Yeah.
And he's got a very niche thing, but he's consistent with it, and that's something that we didn't do and are now doing, and it's just amazing to see the power of it.
No, that's awesome.
Right.
So we're doing our weekly roundup, all of the different things that happen in the world, the economy, mortgage, whatever it is.
How
and
I
then
screwed
we'll
up.
do our client thing. Well, I just
we'll get there.
I got it wrong.
Oh, well, we're going to get there. That's just give us
All
a
right.
chance to rip into you. I mean, it's early on in the episode.
Yeah.
It's early in the morning.
Well, let's first start. Besides the Fed decision, which we're going to get to in a second and rip you, we have a new pope.
Oh, yeah.
Right. And that happened quick.
Pope
The
Leo.
decisions are
Yeah,
usually
but
not that
I don't
quick.
understand. Why do they call him Leo when his name is not Leo?
You get to pick. Like
So
the
you
Pope.
just change your name?
Yeah, you get to pick.
But why?
I don't know.
So you don't like your name, so now all of a sudden...
No,
you're
I
Leo?
think
no,
it
no,
sets
no,
the
no,
tone
no.
of who you want to be.
No,
Like,
I'm no expert in this, but they generally look at historically who has been a pope and change their name to someone who their values and mantra
Right.
aligns to the best. And that's how they choose how they're gonna kind of set the tone on their mission statement. So, if a pope was extremely generous or extremely understanding, or was more socioeconomic or whatever, the history is written on those popes. They try to take the best attributes, add on to
Now
them.
I feel like an idiot.
But you're not an idiot.
No,
How
I
many
didn't
people
know
know?
that.
I'm not saying that I got
How
this
did you
right.
know that?
So my wife will tell you that I store in my brain a lot of useless information. Ask me about important things, not really, but useless, irrelevant. Like, I would be really good on like a Jeopardy or trivia and stuff like that. Whenever I enroll in things, we had one through the school, a fundraiser last year, and we had to do it in teams, and you had to write your answers down and bring it up to the front. And I'm just like killing it. I'm just answering these questions. Like, how do you know this stuff? Are you Googling it? I'm like, no, sadly, it probably pushed out something really important in my head, but it stays there.
That's it. Money Matrix Trivia Night is Tuesday. We're gonna have one.
I
asked
guess
my wife,
there
she'll
was
tell
a
you.
former pope that was Leo, and then so he
I think
wanted
so,
the
yes.
attributes of.
I think
That's
so.
interesting.
Yeah.
All right, so let's get to the topic before Ronen made a bold announcement. He
Fif-
went from 25 basis points cut to 50 basis points cut and then back to 25.
I did.
And the Fed on Wednesday came out and said,
Nothing.
we're not doing anything. We're
You were
standing
close.
packed. But one thing interesting, Trump again ripped into
Sure.
him. He's like, you're too late. You're always late. You're never
Too
on
late,
time.
Powell.
Too late, pal.
But in honesty, they have to be too late because there is a lag in interest rate announcements in either direction. It takes about 6 months.
It's the lag is the data because they're looking
Right.
at backwards.
The
data.
lag is also the implementation. So if they say 25, 60, 50, 100 basis points, until that really resonates into the market and the market starts to pick up on that, there's a lag as well. So if they didn't do now, he's saying not the information that was the lag because they use historical data. It's the implementation that's a lag. And, Trump is saying, and he shouldn't be the one creating policy on financial markets. Let me clarify that. But he's saying that if you don't make the cut now, 3, 4, 5, 6 months from now, you're going to be behind. I know they meet on a monthly and evaluate that, but still, it takes a while for it to actually permeate in through the economy.
But because of the data that came out, the stats, every month it's like a betting type of system. What percentage will they cut? And a lot of people thought in June, but I don't even think that's even happening now. They've pushed that off further, which I don't know. I mean, again, the data is there. So what do we have that came out? GDP came out. What else came out?
I mean, everything, we got all the updated figures, but you said GDP came out. How do you see that impacting? Because I know a lot of things like the PCE and other factors for cost are inflation, indicators. How does the GDP directly relate to the Fed's interest rate decisions?
Well, I mean, negative GDP with what we had is for the bond market, it's good to cut rates, but you had other inflationary items that kicked in that sort of forgot about the GDP. They're more worried about the inflation and the tariffs. I mean, the good thing is we have our first quote unquote deal. Is that safe to say, or we don't know
verbal
what it
deal,
is?
but just like everything that's been on the Trump administration, policies written by Twitter and Truth Social, announces this deal with the UK in as a handshake deal, and the markets flew yesterday.
Yeah, it was big, but again, they were saying UK really is not an event because they're an ally, sort of, and there were no issues, and I don't even think they even had any real tariffs. But the confidence, the consumer confidence, the perception is really what it was about. But I heard just this morning that he's thinking of reducing, and he's so funny the way he does. Yeah, I think 80%, 85% sounds like a good number for China. And they're like, where do you get that from? He's like, I don't know. I just like the number.
I don't buy that. I honestly don't buy that. I mean, let's look. Trump.
But why
of,
random? I mean, I know
it's not random.
But I know. There has to be a mathematical thing behind it. But why 85?
So I'm going to make an assumption again, and none of us know what happened behind closed doors. When Trump makes a decision, he's not doing it in a vacuum. He's not doing it without counsel, without the really smart people that impact that directly. There's lobbyists that used to infiltrate the government, and it's obviously been negative. But you have this guy who probably is trying to figure out what the median is, the metrics where the United States still benefits from a cash inflow, and it's still going to be well received by the markets. And it's it doesn't seem so off base. The tariffs on China were like 155% or something like that.
145.
Right.
45.
And when you're negotiating, you try to kind of meet in the middle. That number seems like kind of in the middle. So it doesn't seem like it's such an off base calculation.
I mean, listen, he usually throws stuff out and sees what the general vibe is from the market, and the stock market does well. He'll keep going with it. But the minute, and remember, he started with, I'm not changing anything. I'm not reducing anything. I'm not doing anything. And now Wall Street's gotten so used to that before, when he did that, markets tumbled because they're like, he's too rigid. It's not going to happen. And then the next day he's like, Yeah, I decided I'm going to pause everything for 90 days. So I think it's more of like a test. Here, let me just throw it out, like you throw chum in the water.
I think there's
Let's
something
see how
to
if
that.
there's any action going on. I think that's what it is.
But he ran on that. He ran on being not a politician. I think it's, in fact, I'd say that's why he won. Right?
I
Drain
think
the
it's
swamp.
great. Listen, he just goes with a gut feel. There's no set in stone with him.
I mean,
But-
maybe Alan will dispute this, but you have to agree that not doing anything and keeping things the way it was not working.
I don't know if he'll agree with you.
If you want my actual opinion, I mean,
I do want your actual opinion.
Yeah, I think it was working in the sense that everything was much better then. We've only gotten worse since then. Markets have tumbled, prices have gone up, everything's in the can. I mean, I can't look at what's happening now and say, thank God this is so much better.
Interesting perspective.
But maybe
You-
no. Here's the
you
truth
must be
though.
from California.
To be optimistic in the long term, if things do improve, we can all look back on this and say like the man was right. And I think that it's unfair to judge so soon if it's working or not, because of course
That's a good, fair statement.
there's damage that is irreparable that has happened. But
How do you say it's irreparable?
Yeah.
all the
I
money
won't-
people lost in the stock markets,
Yeah, but
retirements.
that's paper loss.
Yeah.
Unless
But
you
that's
actually
people's
physically
lives. You can't just look at that and say
No,
that's
no, no.
No,
paper
no, no,
loss.
no. That's paper loss.
Yeah.
So it is on paper. So people's retirements, right? Retirement is physically means
Sure,
20 longevity.
sure.
So there has been crashes, there's been ups, there's been downs. The .com, 1989.
What about people whose retirement comes up in 5
Most
years?
of
who
that's-
don't have time to build.
So
it
maybe
back?
if you got caught in the
That's-
crossfire in the short
right.
term, but I don't think that there's enough of that of a sample size for what the damage has been done. And I'll even counterbalance that if you're sitting in a prudent portfolio, sitting on a drip, when things went down, you were buying down in a lower cost base, and I think it's actually a better.
I
long
guarantee
run.
you,
people who are buying, sure.
I guarantee you'll make all of that, whatever, 6 trillion, whatever number that was. I guarantee you in 12 months' time, it'll be over than more than that.
And the markets are showing that. I couldn't agree with that
100%.
statement.
If it works out, I'll eat my hat. But
No, I don't-
Until,
Wow,
until
it's not-
then,
I'd
no
like
point.
to.
No
see-
one's
will
worth
you
it.
eat it online, like
like
live,
like on the
live?
cameras. Yeah,
Have
we'll
you heard?
make a hat.
Have you heard
but-
the saying that bulls make money, bears make money, pigs get slaughtered? Right. That's
No, like if you can
So-
explain it.
So I'll tell you. So in a bull market, everybody's going up. It's great. In a bear market, you can short, you can buy all sorts of derivatives, and if you stay the line, it actually benefits you as long as you're buying down your cost base.
Right.
It's the people that panic and start making moves and sell on the dips and buy on the ups. So bulls make money, bears make money, pigs get slaughtered.
It's the greed factor or the fear factor. It's both, right? It combines to both. But in general, look, I'm a firm believer that, like you said, we're going to see what happens, and
We'll see.
and we'll look at it. But more importantly, though, the consumer sentiment is really upticked, which is great. I mean, these last couple of days with what's happening, I mean, overall, it still sucks. It's in the toilet. I mean, that's a reality. But in general, though, you need a little bit, and then you inch back a little bit. So what else did we have here, Alan?
The market performance, since we're talking about upticks, you guys wanted to talk about the last couple of days. Since the UK deal, everything's been green. Is there long term in that? Do you guys think this is a weekly thing that because the UK deal happened, it's happiness and excitement? Then on Monday we find out, something bad? Or
I think there has to be continuity and continuance of deals. When you sign the European Union, when you sign, China, when you sign these larger name brands, if you will, then you'll see real true stability and thing. But right now, if there is nothing to follow it up, the market's going to be like, well, why isn't there anything following up? What's happening? Is there a breakdown? So no, I think it's right now that excitement. But if there's no follow up, I think you're going to see the market come back down again for sure.
And for interest rates, is there going to be an immediate change? Like even with the UK deal, if that happens, do interest rates change this week, or is there going to be no change for us?
Look, rates went up yesterday.
So yeah, that honestly, I seeing what's happening, and I was under the assumption that Trump created so much pressure on the markets that rates would have to come down. They held steady, which means
They went up. Look at
Yeah,
the 10 years,
yesterday.
4.38.
Yeah,
So now
yesterday.
I'm actually going to tell you that it'll stay steady and start moving up, because you're talking about deals being done. There's already a lot of companies that realize there's volatility in doing business in other jurisdictions and intellectual capital theft. We have to start moving some business into the United States. And Trump is a quarter into his midterms, right? And I think now we've actually seen the bottom out, and we're just going to see a steady slope up over the next couple of years.
I mean, look, you see all these companies are talking about capex spending and how much they're going to spend and do, and you have a lot of companies contributing a lot of money. Where was the 10-year the last couple of like last week? I think it was 419, 418, something like that.
I'll actually get you the number. Let me pull that up. Jamie, pull that up.
Yeah, Jamie, please get that.
In the meantime, while you're also talking about that, what about crypto? I saw crypto rebounded as well.
Yeah. Right now, so
I hate
what's it called? Bitcoin is over 100,000 again. 102,000 did it hit today?
So terrifying.
Why is that terrifying? I don't
Well,
understand.
I was on the FOMO crypto run on a personal basis, and when I tell you I take a bath, I mean it went to zero, and I'm talking about 6 figures here. So in my own personal investment, and I don't understand it, and I got into it because everybody seems to get into it, and everybody became a crypto expert overnight. I studied about the blockchain, and that the technology is going to end up permeating through a lot of the way business is done, and it's rightfully so from my very minimal understanding of it. But crypto as a whole has no intrinsic value, does not create anything. And if I'm putting anything into crypto now, as much as everybody loves Bitcoin, I would be in stable coins.
So
listen,
I'm going to throw this up. This is the 10-year yield over the last 5 days.
so if you look where it bottomed out before it started going back up, no, over the last, when was that?
This was 5.8.
Okay, so go back. Yeah, right there.
We're at 5.7.
Okay,
4.27 at close.
so 4.27, and right now we're trading 436,
Yep.
and we hit a high of 439.
3.9.
So just that volatility in the last couple of days, I mean, that's a big number. Everyone was anticipating rates to come down, or at least have some type of thing. So now,
With rates going up, the 10-year going up means rates go up. There's not a way to time it. Like you've always said, you can't really time the market as much as bulls and
can't.
bears are eating. I mean,
You can't ever, nobody, there's market makers that can make a market on an individual equity, maybe something more material than that. But overall, the market is an organic thing that doesn't have just numbers associated to it. It has so much speculation and greed and fear all sprinkled into it, and you can't ever put it into like a quantifiable formula. I know I've tried to put that into ChatGPT.
what about
didn't do it.
excitement and happiness and rainbows and butterflies? Any of that in there?
I think that's a major component of it. And when people believe that that's what it is, we had that podcast with Irene Yoffe yesterday, and the markets will stop moving when people don't think that there's hope in the future for earning potential.
right, and that'll never happen.
And very likely but their situation has remained the same from what it was the year before from an earning perspective. That stayed static unless you're in a cyclical business like real estate. But if you're on a payroll, you're earning the same. You're just not getting as much bang for your dollars, and you don't see the value, and then you don't see the hope. And that will drive a market. But if people are hopeful and things are going good and we got world peace and all that, the markets will go boom.
Client.
our client, they came to us and they wanted to cash out because they were looking at other investment opportunities. And their whole big hedge was, well, I have a 4.5% rate on my first mortgage. I said, okay, so what's the problem? They're like, well, we don't want to refinance. And they kept going at this. We don't want to refinance. How are we going to buy another house? We need the money from the house. And they couldn't understand that they could get a second mortgage until literally I sat down and I broke it down exactly. We're just going to take a second mortgage. We're going to put it on the actual house. The rate's going to be a little bit higher, but at the end of the day, you're going to be able to still buy your future home that you're going to move into. And even though you have a higher rate, your blended rate is low enough where the rent you're going to collect is going to cover the mortgage. So finally, it was like, all right, let's do it. So we got them $500,000. They just went into contract on a $2.6 million home, and they're moving, they're upgrading. That step up buyer is the new big thing now. I just heard on CNBC yesterday that majority of the purchases now that are happening is that step up buyer. They're
which is, by the way, a sign of a very healthy economy.
100%.
Yeah.
That I mean, if you want to look at what people are doing, they've got equity built in. They want a better lifestyle that they earn. They can control it. But for that $500,000, were they using the $500,000 second as the deposit for the new
Correct.
purchase?
Right.
So they'll still need financing for the remaining.
Yeah.
So it's a fully leveraged house.
Yeah. Well, I think
Well, in essence, but because their primary residence isn't so over leveraged, we didn't go to the hill on both.
right.
It worked out fine. The leverage on their primary that they took the money out was 60% combined. So, they still had plenty of equity. So these are people that are understanding these step up buyers. Some are selling, a lot are qualifying with their home intact and buying another one.
Which is exactly the scenario I'm heading into in probably 6 to 8 months. And
Yeah.
we're going to need to look at that.
And literally a lot of them they noticed are more on the entrepreneurial side and more on the the self-employed, the contractors, that's where they're noticing the bigger lift, because your W-2 person is more, like you said, capped, so they can't qualify even if they wanted to move up
Right.
because of higher debt to income ratios and whatnot, because of where the rates are. So they're stuck because they're not going to be able to carry two homes, and they don't want to sell or they can't afford, so whatever. So the note that uptick is from that marketplace.
Also, this was a really cool deal because, like he's saying, they were going from one primary to another primary, but they had to qualify the house they live in as a primary. Like he said, they want to rent it out to cover the payments of the mortgage, but you can't use that rent because they're not renting it yet. You know what I mean? And this person was a doctor. They took payments from different places. So they were qualifying with like checks, Venmo. They had their own payment plan setup system. It was really complicated income, but they had to use their income. Because in your case, if you were to buy like an investment property and then cash out, it's so much simpler. Oh, it just rents for this much. Even though they're using this house as a rental in the future, they couldn't structure the deal that way. So it was a fun
Yeah.
one.
All right. Thank you all. Have a great week, and looking forward to the next week.
Nothing can stop me. I'm all the way up. All the way up. I'm all the way up.